Welcome to Cyber Stock Reports. I am your dedicated researcher. Today, we're decoding the mystery behind Broadcom, ticker AVGO, based on data as of December 9, 2025.
Disclaimer, as displayed on screen, this is an AI-powered simulation and not financial advice. Invest at your own risk. Okay, with that out of the way, let's dive right in.
You know, for years, the market has had a very specific story about Broadcom. And as we're about to see, it's a pretty outdated one. Our data suggests a huge shift has happened right under everyone's noses. So the real question we're asking today is this. Is Wall Street's old narrative blinding them to Broadcom's new reality as a true titan of AI? So let's start with that old story. Historically, Wall Street looked at Broadcom and saw one thing, a financial engineering machine. The playbook was simple, right? Acquire a company, integrate it, and squeeze every last drop of value out of it. They were seen as masters of M&A, not necessarily leaders in groundbreaking organic innovation.
But that perception, it's being completely shattered by the reality of the data. The truth is, Broadcom has pivoted, and pivoted hard, to become the undisputed heavyweight champ of AI custom silicon. So let's be clear. Our analysis shows that the old story just doesn't fit anymore. It's dead.
And this is where it gets really interesting. This brings us to the bull case. Broadcom isn't just a supporting actor in the tech world anymore. No way. Our data indicates it's now the dominant, foundational force behind custom AI chips and the critical networking that makes everything work. Let's break down exactly why. Our models show this bull case is built on three rock-solid pillars. First, their absolute dominance in custom-designed silicon. Second, what is essentially a monopoly on the high-speed networking that AI just can't live without. And third, a massive new catalyst, their partnership with OpenAI.
Okay, now this slide really frames the market perfectly. Think of Nvidia as selling a fantastic but off-the-rack suit. Their GPUs are incredibly powerful, but they're a one-size-fits-all solution. Broadcom, on the other hand, they're the master tailor. They create bespoke, custom-designed chips, we call them ASICs, for the huge hyperscalers like Google and Meta who want something perfectly fitted to their needs and want to reduce their reliance on Nvidia.
And this quote just brilliantly sums up the whole thesis. Broadcom wins no matter what happens. I mean, think about it. If the tech giants keep buying Nvidia chips, Broadcom wins because they sell all the essential networking gear to connect them. But if those same giants decide to build their own custom chips to compete with Nvidia, well, Broadcom wins again because they're the ones designing those custom chips for them. It's the ultimate Nvidia hedge.
Here's a really powerful way to look at this. In the middle of this AI gold rush, everybody's focused on Nvidia, right? The company's selling the pickaxes. But the data shows Broadcom is playing a totally different and maybe smarter game. They own the railroad to the mine. That's their networking monopoly. And they build the custom drilling rigs. Those are the bespoke chips for the biggest players. It's like they're the infrastructure bond of the entire AI age. Now, this isn't just a great story. It's a story backed by some seriously strong financial data. So let's shift gears and look at the hard numbers to see how this narrative is translating into some pretty incredible growth and profitability. This is the number that just jumped right off the page in our model, 63%. This is the acceleration rate of Broadcom's AI-related revenue, and it looks like this is the engine that's driving the entire company forward right now. And this chart really puts that number into perspective. You can see, while their overall revenue growth is a very healthy 22% year over year, their AI segment is growing at 63%. It's just massively outpacing the rest of the company. A key segment growing this fast is fundamentally rewriting the company's entire financial profile. And what's really amazing is that they're achieving this incredible growth with jaw-dropping efficiency. I mean, look at this. Operating margins are over 60%, partly thanks to the VMware integration. A free cash flow margin of 44% means they're just printing cash. And a return on invested capital over 15% shows they know exactly what to do with that cash. It's a machine.
Of course, a good analysis has to be objective. We have to look at the other side of the coin. We need to examine the bear case. With the stock trading where it is, we absolutely have to understand the potential risks on the horizon.
Which leads us to the critical question for any investor looking at this today. Is all this fantastic news already priced in? With a forward PE ratio floating around 45, the market isn't just optimistic, it's expecting absolute perfection. Any little misstep could be punished and punished hard.
Our models have flagged 3 main risks to keep on your radar. First up, concentration risk. A huge chunk of their revenue comes from just a few giants: Apple, Google, and now OpenAI. Second is that valuation vertigo we just talked about. The expectations are sky high. And third, there's the potential competitor gap, because Broadcom has limited exposure to edge AI, which is AI on devices, compared to the data center where they totally dominate. So how do we weigh this incredibly powerful bull case against some very valid risks? Well, for that, let's turn to our proprietary gap analysis model to synthesize all this data and give us a final verdict. Our gap analysis model kicks out a score of plus 55. Now, on our scale, that's a really significant reading. What it tells us is that there's a huge gap between the market's fears, worries about an AI bubble or a potential earnings miss, and the fundamental reality on the ground, which seems to be a massive order backlog and accelerating spending from their biggest customers. So, based on all this data, our final rating is an A for strong buy. Now, the data suggests that while you're likely to see some short-term volatility, especially around earnings reports, the long-term investment thesis here looks absolutely ironclad.
And this quote from the source material just perfectly captures our findings. While a lot of people are worried the big AI party might be winding down, our analysis shows that for a foundational player like Broadcom, well, the invitations are really just starting to go out.
This has been a report from Cyber Stock Reports. The final investment decision is yours alone.